How times have changed since the latter part of the 20th century when Japan was such a strong economy. It's now the world's most indebted country with a debt to GDP ratio of, wait for it, 248%. That's according to the International Monetary Fund. Well, Japan's latest growth figures, they've also surprised investors, coming in at a lot lower than had been expected, as Lucy was just alluding to. The world's third biggest economy, it expanded at an annualized rate of just 0.2% in the 3 months to June. That's much slower than the 0.7% that many economists have been expecting. And this is despite Japanese authorities undertaking huge measures to try and stimulate growth. Its central bank has been flooding the financial system with cheap money. The government, that's also been working to encourage growth by increasing spending. Well, earlier this month, Shinzo Abe unveiled a stimulus package that the government valued at around $274 billion. But it seems that all the efforts to encourage growth are really struggling to make a big impact. Well, Jane Foley is a senior foreign exchange strategist of Rabobank. Jane, to begin with, how surprised, and more importantly, how worried were you by these second quarter sluggish growth numbers?
Well, pretty worrying. And to put it in perspective, the market came out, or the market median for this number was 0.7% on the quarter, and yet it came in at just 0.2. So economists really were wrong-footed by the weakness of this number. Now, there is a little bit of good news if you say, well, the first quarter was much better. That was perhaps boosted by the leap year. And if you take that out, that means that the second quarter on a Q-on-Q basis perhaps isn't too bad. But I think generally speaking, there is a big sense of deja vu with these data. For 25 years, of course, Japan has been a really sluggish economy. And one of the big reasons for that is because its population is diminishing. They have got a very aged population, and that means is that it's very difficult to stimulate demand, even despite the huge amounts of fiscal spending by the government and the huge amounts of monetary policy stimulus too from the central bank.
So what is the Bank of Japan to do here in Shinzo Abe, Jane? Because clearly just pumping more money into the economy isn't working. Is there a problem of confidence here? Is it that wages aren't increasing? Why aren't people getting out and spending?
Well, wages certainly are pretty slow. Now, that is something that we've seen really throughout the whole of the Western world. It's the same in the UK, and the same in the US even. But of course, one of the really big issues that many economists have been throwing at various Japanese governments over the last couple of decades is that there is a lack of structural reform. Now, what do I mean by that? Well, that is really reform of the labour market, maybe getting more women into the workforce, which would help boost the number of workers, but also would help achieve the balance really between the number of pensioners and workers too. So structural reform is really what economists want to see. This current government did come to power on the promise that it would bring more structural reform, but of course there have been certain disappointments as well as successes along that route.